If your UK business bank account suddenly gets frozen, restricted, or flagged, especially as a non-resident, you are not alone. Many founders believe that once a bank account is approved, the hard part is over. In reality, approval is only the beginning. In this video, I'll explain why UK business bank accounts get frozen for non-residents, what triggers these reviews, and how you can avoid problems before they happen. Here's an important reality check. UK banks do not stop monitoring your account after approval. They monitor activity continuously. Most account freezes do not happen at the application stage. They happen weeks or months later, when activity does not match expectations. For non-residents, this monitoring is stricter, not because of nationality, but because cross-border risk is higher. Banks monitor non-resident accounts for three main reasons. First, anti-money laundering regulations require ongoing checks. Second, banks use risk scoring systems that reassess behavior over time. And third, transaction patterns must stay consistent with what was declared during onboarding. Monitoring is not a punishment, it is standard compliance. The number one reason non-resident accounts get frozen is a mismatch between declared activity and actual transactions. For example, you declare a low-volume consulting business, but suddenly receive large payments. Or your business starts receiving funds from countries not mentioned during onboarding. When this happens, banks pause the account to understand the risk. Another major trigger is unclear source of funds. Large deposits, transfers from personal accounts, or third-party payments can all trigger reviews if they are not clearly explained. Banks are not accusing you of wrongdoing. They simply need to understand where the money comes from and why it is moving. One of the most damaging mistakes non-residents make is ignoring compliance requests. Banks often send emails asking for clarification or documents. Late replies, vague answers, or silence can quickly escalate a review into a restriction. Fast, clear communication is one of the easiest ways to prevent freezes. Fintech banks and traditional banks behave differently during reviews. Fintech banks monitor faster, freeze faster, and resolve faster. Traditional banks move slower, but investigations can take longer and involve more paperwork. Neither option is better or worse. They simply operate at different speeds. The best way to avoid account freezes is prevention. Keep your activity aligned with what you declared. Scale transactions gradually. Respond quickly to bank requests. And inform your bank before making major changes. Predictability reduces risk. UK business bank account freezes for non-residents are rarely random. They happen when risk becomes unclear, activity changes suddenly, or communication breaks down. Non-residents who treat banking as an ongoing relationship, not a one-time setup, rarely face serious issues. For the full prevention guide and next step resources, check the link in the description and subscribe for more clear, practical UK business guidance.